Let's though start with our stock of the day. It is in the defence space. We know what's going on there, clearly, given what's transpiring in the Middle East at the moment. So our stock of the day is Electro Optic Systems. EOS has secured 2 orders for counter-drone systems worth $64 million from customers in the Middle East and also the US. It says it's continued discussions with several Middle Eastern governments regarding the supply of anti-drone systems given the war in the region. Also says the conflict may create more sales opportunities. Now, in fact, more recently, the stock shed about 8% as the ASX said a contract win announcement on December 15th was not sufficiently detailed to meet the operator's expectations, so shares took a hit as a result. But Luke, moreover, given obviously the opportunities presenting itself at the moment for EOS, are you liking it?
Well, I mean, look, it's a very opportune time to announce a Middle East and counter-drone contract, isn't it? And not a small one either. Look, I mean, the defence thematic is doing a lot of heavy lifting in this stock. To be fair to them, like, they're winning contracts and their backlog. I was having obviously a quick look, finding out stock of the day an hour or so ago. Their backlog's gone from 130 mil revenue to 450 over the last year. So they've won a few contracts and some big chunky ones as well. I think what's hard for me and a lot of other investors in this stock, because this is one that's been a very volatile stock in the past and had some real issues with it. It's just, when does that revenue land? Can they generate it profitably? And then the big one where they've had trouble in the past is managing that cash flow, managing cash, managing working capital. So this they're on a calendar year FY report. They lost $70 million in FY25. Now, I know they're scaling this business for the revenue that's about to come through. I don't know it too well. I went and checked some broker forecasts. They've got another small loss this year before inflecting to profitability in FY27. For me, look, I mean, as I said before, a $2 billion market cap, you're heavily loss-making. I need to look 2 years out to find some profitability. I think there's just too much defence thematic in this stock price today. If I owned it, I'd probably be selling. Maybe not the whole thing, definitely taking profits at least. And as you sort of highlighted before, I think there were some pretty valid questions asked in that short report. I looked through it, and obviously, we know how short sellers work. They're going to throw mud against the wall and see what sticks. But I thought they raised some good enough points where even the ASX had to have a bit of a look and say there were some question marks around that contract. So a few things there would keep me away. If you're there, you made good money, I would take some off the table, and otherwise, maybe look to play that defence thematic in other ways.
All right, we'll call that a sell, or at least take some profit, given where it's gone to, and obviously given those concerns. Claude, do you share those concerns?
Yeah, I do. I guess my main observation would be that this is a stock that has traded always on just expectations and hype. So there's never really been any kind of regular profitability or reasonable way you can model profitability. The revenue is very lumpy. So some years it'll be up or down, and big swings because the contracts are big. Like they announced these sort of $50 million contracts. You can imagine a few extra contracts, the revenue can be a lot higher. A little bit less contract winning, and then suddenly it drops a lot. For the fact that they've never really been able to consistently make a profit, even on such large amounts of revenue, to me is a bit of a red flag, to be quite frank. Like, generally speaking, once a company's getting tens of millions of revenue and for over years, you'd expect it to make more of a profit. And so I can't really value this stock. I think that the share price is going to continue to trade on hype and just expectations. I think there are a lot of traders in the stock. It's obviously doing its best to position itself as a beneficiary of the current conflict and that kind of thing. We saw it hit $10 back in 2020 before it plunged down all the way to around well below $2 for years. So I'd avoid it, basically. Definitely, look, it could keep going up in the short term if momentum traders are jumping on board, but definitely not even any kind of thesis that I can see would just be gambling to buy shares to me.
I'm going to call that a double sell then for EOS. Righto, that's our stock of the day.